Now we're actually entering the Q&A phase, so I would like to ask all the speakers to the stage. I think we should maybe do 5 minutes Q&A if you're agreeing, and then we will go down because there is plenty of time to have a bilateral discussion afterwards. Okay, there was already a question. Yes, just 1 second until you have the mic.
I have a question to a salmon farmer. Yeah. How high is your debt?
Today we have a debt at the end of Q2, we had 20 billion NOK in debt. We have a leverage of 3.6 to EBITDA, which is above our long-term target to be around 2. And the reason for the increase this year is driven by mainly 2 factors. One is the lower salmon prices we experienced the first half. And the second, we paid some additional taxes at the early this year for 2 billion NOK. And the reason why we did that is to postpone future tax payments when the resource tax came. So we expect this level to come down during 2026, and we have strong credit facilities, though are close to 28 billion. So we have the liquidity we need. It's more just get the EBITDA a little bit up, and we expect that to happen when we go into 26.
What is your gross margin and your net margin, and how much are you paying per share dividends? Percentage?
Our dividend, to take that first, historically we have been around 100% of our earnings per share for the last years or so. And this year, or for 24, we paid 22 NOK per share, and our share price today is around 5.30, and you can calculate from that. We have a dividend policy that states that we want to pay out surplus liquidity as long as our leverage ratio is between 1 and 2.5. And we have annual cash dividend that we announced in February, and we pay it out in end June, early July.
Is there any other questions? Yes, there is a question here.
Yes, I have a question to the 2 gentlemen from SalMar. If your current price of salmon is around 70, if I recall correctly, and your forward price of 80, so retail price is gonna be close to the price of beef, more or less. First hurdle. Second hurdle, if your salmon is, sorry to speak so, is pimped with antibiotics, how would you plan to overcome the problem of increasing demand for salmon?
We take the antibiotics first, and then we can comment on the first question afterwards. We don't use antibiotics. Easy as that.
Zero.
We use vaccines, and we have very effectively gotten vaccines against all major diseases for our. In the 90s, we used a lot of antibiotics because we didn't have vaccines. Since actually, I will say 97-ish, we haven't used antibiotics.
It's actually one of the strongest selling points of the Norwegian Atlantic salmon, that it's raised without antibiotics, and that's hard to say for other salmon and protein sources.
When it comes to pricing, there is a correlation between all animal proteins and also salmon market prices in the grocery stores. There is not a one-to-one. There is a seasonality in our pricing. Usually it's the lowest price you will get in September because there is most supply coming out to the market. And that's because of seawater temperatures. The salmon is it grows faster when it's warmer in the water, easy said. And so there is usually higher prices in the first half and it's lower prices in the second half. And we expect the prices to tick up more when we get to November, December now. Actually, the last 4 weeks has surprised us a little bit because we knew that the supply out from Norway will be around 40,000 tons. But even though it has gone 40,000 for 4 weeks straight, we have seen the prices go from mid-50s to now in the low 70s, which is a very strong signal for demand. And for us as a producer, and what you see in the grocery store, that has a lag. I think there are some importers who buy salmon from us and sell it in the grocery store who have earned money this year. Because we have gotten a lower salmon price and they have sold it at the same price in the grocery store.
Maybe it's misunderstood. 70 NOK per kilo.
Yeah.
Divided by 10.
Megatrend.
7 cents.
7 euros.
7 euros.
7 euros per kilo.
Same it's 10 times cheaper than beef.
Yeah.
So it's affordable protein, but of course, over the long run, we follow also the trajectory of all animal proteins. But there is not a one-to-one, there is a seasonality here.
Other questions? Yeah, Martin.
Yeah. Yeah, it's very good. I have a question regarding the oil market. Isn't it true that the situation in the shale oil is much worse? Because after the crash of the bond market for the shale drillers, the easy money from Wall Street, the channel was closed, so the shale producers were extremely focused on drilling tier 1 oil to compare it to mining. So they mined the high grade tier 1 assets, and now these are drilled. So what's coming live now is tier 2 and tier 3, where the oil in stone is much lower. So it's much harder for them to keep the production where the production is right now. So not is growing the problem, it's also the problem to stay the production there where it should be.
Yes, you know, from our readings in the last 3-4 years, you have several things. One is that they have been high grading, so they have been moving to the best fields, obviously. You move there. Second, there have been concentration. The biggest companies have bought already the better assets, and they have industrialized the thing, and the productivity per feet has been growing until 23, 24. And productivity this year is going down. So nobody really knows, but you know, first, if there's no capex, there's no fracs, and there's no fleet, and there's no drilling rigs, production will go down. And then at some point, you will go to tier 2 and tier 3, which will accelerate the decline. And then, you know, you need to invest in a business model which is very complicated, because the depletion is 30% in year 1, 30% year 2, another 30%. So you deplete the field in a couple of years, and then there's some lag in production. So the whole business model is very tricky. We knew it in the beginning. You need to reinvest. You need to reinvest. So if you don't invest, and you go to tier 2, productivity goes down, it can be a disaster. This is why I was thinking on the option. So why are you invested in oil if you think 25 and 26 is not that good? Well, maybe we will have a surprise in shale oil production. Yes. So maybe the maturity will not be like this, but it will be maybe like this. We need 75, 80.
With that, I think there are a lot of clever questions that are still can be asked to the gentlemen here. Now, these gentlemen are usually flying with business luggage, so that we cannot give them red wines or Spanish wine or Austrian wine, which is full of Frostschutzmittel, as people mind. So we decided to go for a Swiss chocolate, because the only Swiss company we own now in our funds is Barry Callebaut, that we bought a couple of months ago because it got hammered. And Warren Buffett basically stated in Omaha this year, the first time he bought Hershey chocolate in 1954 was because of the cocoa prices tripled 1.5 years earlier, and then Hershey chocolate prices halved. History doesn't repeat, but it rhymes. Thank you very much.
Thank you.
And for you, of course, as well. And last but not least, no presentation without AI. Some of you have already seen it. So I asked AI, how do ours, Marcus, and me, and Carlos look in 25 years in an ideal world? Urs is joking, he still looked the nicest, maybe he is. It's your decision, but by then we probably can tell you we do not only have 120 years of investment experience, but hopefully 220 years. With that, I would like to conclude, and thanks a lot once again for coming here.